The majority of interest rate contracts are traded through the Chicago Mercantile Exchange Group, or MERC, founded in 1898. The MERC is the largest dollar volume exchange group worldwide. To give you an idea of the magnitude of the MERC's volume, the open interest in just the 3-month deposit contract currently exceeds 28 million, representing a total face value of 28 trillion US dollars. To put this in proper perspective, $28 trillion exceeds the combined value for the world's two largest economies, the US at 18 trillion and China at 8. In total, the MERC handles over 3 billion contracts worth more than a quadrillion US dollars annually. See link 2 for a list of markets traded, links to contract specifications, and quotes. Monies traded through the MERC members are guaranteed plus or minus trading activity through the financial safeguard system, with aggregate performance bonds of approximately 146 billion, virtually eliminating third-party credit risk. See link 3 for additional information. The CME also offers a wealth of information and special reports. For example, see link 4 for the CME countdown to higher interest rates. Link 5, global commentaries on energy, equities, currencies, interest rates, and metals. Link 6, educational material, courses, and trading tools for every sector. Link 7, objective and informative videos to keep current with markets and industry events. Link 8, the CME Futures Institute to learn more about markets and trading. In the next 2 minutes, I'm going to let Fed Chair Yellen tell you where the low end of Fed expectations is for the Fed funds rate and when.
Good afternoon. The median projection for the federal funds rate is just below 2% in late 2016 and rises a bit above 3% in late 2017. The median projected rate in 2017 remains below the 3 3/4% or so projected by most participants as the rate's longer run value, even though the central tendency of the unemployment rate by that time is slightly below that of its estimated longer run value, and the central tendency for inflation is close to our 2% objective. Participants provide a number of explanations for the federal funds rate running below its normal longer run level at that time. These include, in particular, the residual effects of the financial crisis, which are likely to continue to constrain spending and credit availability for some time. I'd like to emphasize that these forecasts of the appropriate path of the federal funds rate are conditional on participants' individual projections for economic output, inflation, and other factors.
Translated, a contract that's currently trading with a rate of 0.38 has a valuation of $1,583. December 2015 Fed objectives 0.06250, contract valuation 2,604. March 2016 0.9394, contract valuation $3,914. December 2016 1.8750%, contract valuation $7,812. December 2017 3.25%, contract valuation $13,541. The 1954 to 2014 average was 5.10%, contract valuation $22,250. In the next 2 minutes, once again, Fed Chair Yellen will tell you what the median expectations are for the Fed funds rate at the higher end of their expectations.
Employment is rising at a healthy rate, and the U.S. economy is strengthening, reflecting in part a highly accommodative stance of monetary policy. At some point, it will become appropriate to begin reducing policy accommodation. assuming that the economy evolves broadly in line with participants' expectations, almost all participants believe that it will be appropriate to begin raising the target range for the federal funds rate in 2015. By late 2016, the median projection for the federal funds rate at 2.5% remains more than a percentage point below the longer-run value of 3.75% or so projected by most participants. FOMC participants provide a number of explanations for the federal funds rate running below its normal level for longer-run level at that time, in particular the residual effects of the financial crisis, which are likely to continue to constrain household spending and constrain credit availability for some time.
Translating Fed expectations for the Fed funds rate, at 0.38%, the contract valuation is $1,583. By December 2015, 1.125%, contract valuation $4,687. March 2016, 1.5%, contract valuation $6,250. December 2016, 2.5%, contract valuation $10,417. December 2017, 3.75%, contract value $15,625. 1954 through 2014 average, 5.1%, contract value $22,250. Once again, in a speech before the City Club of Cleveland on 10th of July 2015, Yellen reiterates, it's time for a rate hike in 2015.
Based on my outlook, I expect that it will be appropriate at some point later this year to take the first step to raise the federal funds rate and thus begin normalizing monetary policy.
For verification directly on the Federal Reserve's website, see link 9 for Fed videos, speeches, and transcripts. From current historic lows near zero, short-term interest rates can only have a major market move in one direction, higher. In my opinion, the Fed has made it clear on multiple occasions where they expect the rate they set and when. Currently, the March 2016 delivery is trading at 99.62, representing a rate of 0.38. Contract value $1,583. If the Fed funds rate moves to the low end of Fed expectations, the contract price will fall to 99.06. The Fed funds rate will increase to 0.94%. The contract value will increase from $1,583 to $3,914 for an overall appreciation in contract value of 147.25%. If the Fed funds rate moves to the upper end of Fed expectations, the March contract currently trading at 99.62, representing a rate of 0.38%, value $1,583, will fall in price to $98.50, representing a rate of 1.50%. Contract value will increase to $6,250, or plus 294%. Let's assume that the Federal Reserve is only half right about the rate they set. And for the March delivery 2016, currently trading at 0.38%, contract value $1,583, moves below the lowest of current Fed expectations to 0.76%. The contract value increased from $1,583 to $3,166, which still represents an increase in contract value of 100%. If you'd like to learn more about the Fed funds and 3-month rate contracts, see links number 10 and 11 below. If you'd like to experiment with any potential outcome for these trades or your own criteria, call me, and using the spreadsheets on 12 through 14, I'll walk you through it. If you're ready to open an account, $5,000 to $100,000, Seedlink 15. $100,000 to $500,000, Seedlink 16. $500,000 and above, Seedlink 17. These videos aren't meant to replace me, just to give you the information you want when you need it. If you have any questions or need additional information, call me or email at any time. Thank you.